Okay, everyone, and welcome back to the Morning Edge. Let me just move this away, and then we'll get started on the bias chart. Um, as I said, we got that move in gold finally, um, and we're looking for this move in. We're looking for a lower move in euro. We have the support of 624, but as I mentioned before, we're looking for an overall move to 609. As I said, the last couple of days. Um, I think we'll get a bounce off the 609. I'm not saying, hey, look, at 609, mortgage the house. That's what we're going to. No, I think that 609 is a target where they will get to. Uh, and what I mentioned over the last couple of days is, let's see what's going on at that time we get to 609. If the world's coming unglued in Europe on their political concerns, then obviously we'll move into the bias pivot at 568. It's that simple. Just the way it goes. Like I said it before, say it again. People laugh about, you got too many levels, you got too many of this. Look, the market just trades. You can see this here, level to level, level to level. So, as it gets very bullish, it gets overdone. I never would have thought it would have got above 108. It did. We said, hey, look, if you think about it, if this is a good NFP, we're probably going to end up fading. And, like I said, then we got all that political uncertainty. We came into the 38%. They're traded very technical, and we rallied back. We mentioned about, I don't know how many people there were, but obviously there were going to be a lot of people that were long from up in here. So all those people have been, really taking a bath, if they hadn't already gotten out, down 100, 150 pips. So as we got back here, people were going to say, well, now I'm only down 50 pips, or I'm only down, 30 pips. Why don't I just get out? And on top of that, I thought that the rally here was rather feeble. Had it come into this area here, then I'd say, uh-oh, any pullback's going to try and step in and buy. So I wasn't even thinking, if you remember correctly, this is our resistance from a couple of days ago, 696. And we got up in here, if you look at it on a 30-minute, they ran out of gas around the 709. We'll actually even point to that. We'll get to that. We got time. Hang on. Friday's more of a tutorial day. We kind of look how the week went by. You can see here, that's why I use the 30-minute and the 2-hour. You can see, we've seen the significance here also of the 709. You can see it right here. You see how the markets come down here. This was a very key level before, but you see the 709 right in here. So I'm just going right across the touches. Well, they got a little bit above 709. I didn't, like I said, they failed right before the 716. But we had that resistance at 696. And this was a good area. And once again, like I said, you can see it probably a little bit broader, or you get a better feel for it if you're looking at it on the 30-minute here. But the 2-hour, like I said, I prefer the 2-hour, the 4-hour. You can see the action play out a little bit more clearly. But sometimes you can't see the forest for the trees when you look at shorter time frames. Looking at the 30-minute, I think you can see this market playing into this whole theme a lot better, and you can see how on the rally back, it's not a very strong rally, considering we were at 108, and you drop down to 643, and then the rally, takes you, what, about just a little over 60 pips. If it had come into the 740 area, got up in here, I'd be saying, okay, so any pullbacks are going to be trying buying it. So we got up here, people were like, okay, I guess I'll just get out. And those that didn't get out said, well, if I see that price again, I'm definitely going to just get out and take my lumps. And like I said, when you look at it from a price structure standpoint, in the news, nothing's changed in Europe. It's not that all of a sudden everything's hunky-dory, so that's opened the door for us to go lower. And that's what we were looking for. That's what I thought, that we would eventually make a move towards 609. We'll get into the 2-hour charts now. So even though I'll look at the theme of overall what's going on, pretty much what I'm looking at is going to be based on the technicals. And when I'm looking at the technicals, and I'm looking at the structure of the market, we did really well over the last few weeks. Amanda's did exceptionally well. She's a very good trader, but she said the same thing. Looking at the way we looked at it, looking at the structure of the market, we talked about the 1255, the market being able to get down to the dollar yen. And then a move down, we said, we don't know if we'll do it right now, but it looks like we're just going to get down to 1165. Boom. It was 1165. I think we were off by, what, 2 pips, and did a double test on that. We knew that area was 1109 down there for the 38%, but I felt that was a stretch if you consider how far the market had come down. So when you look at here, Yeah, there'll probably be some support right here in the 624. But like I said, before it's all said and done, I think we will eventually come down here to test this 609. So we're going to use that as support. I think, if you're short term, if you're a scalper, then yeah, I would be looking to cover some right here at 624. Might see 622, but we're going to use this as our support, 609, which we may not see till next week. We'll have to see. You never know. Could be sooner than that. So we've already had the 624 here. You see that here? So that's what we're looking for. So let's move this down because we think overall we're going to get down to 609. And resistance, we could put it to 716, which is there, but I don't think realistically it's going to get there. So for right now, for today, we're going to keep this, which was our level before, which was 696. So move this back in here because I think this is going to have to do more work. Like I said, I think we're going to 609. It doesn't mean we won't go lower. I just think that that's where we're going to go. Then you'll see some, back and forth filling. We'll have to see what the market's doing at that point. But yeah, it would not surprise me at all. In all likelihood, it probably will. Going to take out 6 and see if they can gun some stops. Whether we can make it down here eventually to the bias pivot, we're just going to have to see how things stack up at that point. Like what's going on with everything. Are things getting a little bit better with this political uncertainty in Europe? So let's go and move into the cable. Cable, like I said, it was earlier, it was at 24.93. I said, hey, look, I think we're going to make a dip down to 24.33. The low was what? 24.40. And this was just coming with this 24.33. It's just it touches. And my whole thinking there was, look, it's just been back. We talked about this. It's just been a back and forth market, okay? And then we had already mentioned this before that this would support this top of this zone, okay? Would be support. But I think what happened was people thought, okay, we're going to take another leg lower, and then when we didn't, and then a lot of people ended up getting stopped out. So I think that when people got caught up on here, and we had the 61%, we were actually looking for the market potentially to get up to 25.97. It did stall at the 61%, and we ended up pulling back. And so we slid here, and the market's kind of hanging around, and we saw in the news story saying, okay, well, they'll probably take another leg up. My thought was, this back and forth action that we've seen here, we're going to have to come back down here and do some work, which is, like I said, we ended up missing this by 7 pips, but I thought that you were trading at 24.93. I think still we're in no man's land. Maybe they rotate up in here, and then they try and come back a little bit lower again. So for today, we'll just go in and put this resistance right there, which comes in at 25.24. And support, we already mentioned the 24.33, which is about right where it came to. So we're going to go in and keep that there, 24.33 on the cable. And so let's go and move into the Aussie now. We know we got the good news out of China with the heavy imports of iron ore, coal, even crude oil, but the iron ore is really what's going to impact the Australian dollar. So let's go there. And let's just go on and try and clean this up. Could have sworn I'd already cleaned that up, and instead of doing anything, it just didn't say. Well, surprisingly, on the good China news, I would have thought that we had already taken a leg up because I didn't even look at the Aussie. I haven't traded the Aussie in I don't even know how long. So I'm kind of surprised. I think this is worrisome, to be honest with you. If you think the best, import numbers you've seen in years and years, the second highest, and I think it was in iron ore, and I would have expected we would have taken out the 77, and whether we languished up here. This is concerning then, because you have to wonder, a market that doesn't go up on good news, now it isn't falling apart. I think at this point now you have to start looking at areas where you'll see the market pull back. I think it's more susceptible. Now, like I said, they mentioned one of the concerns was the strength of the dollar, and certainly you saw that impacted against the euro, but I think on that great news coming out of China, that should have helped the Aussie dollar to at least gun these stops. We didn't even come close to it. So at this point, I have to feel that it's susceptible for a move down here. And we're going to stay probably with exactly what we already have, which is going to be 75.60. And the resistance at this point kind of looks solid as a rock, 76.86. So let's take a look at this. And that's going to be 76.86 and 75.60. I don't think anything's changed, but I will say that it looks quite susceptible for a pullback at this point. And let's take a look at what that pullback would be. So let's go and take a look at a fib. Well, here's the 38%, which is actually 74.91. Mark this off. And that was 71.60 to 76.97. And 75.70 is actually going to be the 23%. So they'll probably find some support here at the 75.74, but I think it's very susceptible for a pullback. I think we'll actually come down here to the 75.60, but this is where we'll probably, if we do get a more sustained pullback, it's actually going to, your first real target is going to be 74.66, with 74.91 being the 38%. But I would have thought that we'd have been able to gun some stops up in here on that good China news. So we didn't. So there's quite the lid on this market at this point. So that's going to remain there. Let's go in and take a look at the Kiwi. And the Kiwi, we had 71.80 and 72.82. You can see that they did make it down here to 71.80, but they're hanging around here. And with resistance at 72.82, and here was our support here, right there. And that's where they went to. And we talked about yesterday, they had already moved lower, and that they were having troubles with this 72.25, the bias pivot. And we'll pull this out for a little bit more clarity. You can see the significance of 72.25 as the bias pivot. And then on top of that, we had already broken this trend line. And as I mentioned before, I'm not the kind of person that really does too much with trend lines, but I will go in and put it there if to me it feels like it's very significant. And you can see this was a very steep trend line. You can see one touch, two touches, three touches here, basically almost four here. So very significant trend line. So when we broke it, the market was really set up for potentially a move lower. And all we had to do was, at the time, we got the news or the forward guidance out of the RBNZ suggesting that rate hikes were still open for at least the next 2 years. So that really knocked the knock the stool over or kick the legs out of the stool. So that opened the door for us to move lower. Now, once we get lower, it's not like as if anybody's saying, well, let me try and buy this. They're wondering how much further lower can it get? So you can see here, as we got down here, we stabilized past the bias pivot, but once we retested the bias pivot, there were just no buyers here. So we moved down here, we made it to the 71A, the 30%. Before it's all said and done, we should eventually come down to the 71.23. So we really want to be looking at that going forward into next week. That would be what we're looking at, 71.23. We'll put that as the actual support, and resistance would move down here to right there. Excuse me. And so support's going to be 71.23. Let's mark that off on the bias chart. And resistance, let's take a look at this, is going to come in at 72.65. So 71.23, 72.65 here in the Kiwi. I'll move this over here. So let's take a look at the dollar CAD. So we said yesterday, we just thought it was going to kind of, go back and forth. I didn't think, and we said about this, there just wasn't any real direction. We had 31.14 as support. We got just a hair back below 31. We were actually at 31.14 when we were talking about that. So we got down to 30.94. And you can see right now, it just seems a bit directionless. I don't know what the market really wants to do at this point. We said it could be impacted by crude. Crude is higher today based on the OPEC story. So that's going to put a little bit of a downside pressure, but I think this market is just trying to search and find itself. So I expect a little bit of back and forth action. We'll probably eventually have to come down to 30.83 as the market tries to find itself once again. So we're actually going to put this as support. I don't think we'll see that today, but I think that the market's going to try and figure out what to do. We had talked about on the way down, it will be defended between 31.31 and 31.14, which it was initially. We got this dip lower, but I don't think the market really knows what it wants to do. The OPEC news is going to be supported for the Canadian dollar, which puts a little bit of downside pressure, which probably opens, in all likelihood, opens the door for a move down here to 30.83. And let's take a look at on the upside. We're going to keep the resistance here, which is 31.81. I think we have 31.79, which push that up a little bit. But I think we're going to ultimately have to go in and drop down here to this 30.83. And like I said, now they've got an excuse with the OPEC news being supported for crude, and in turn that's going to be supported for the dollar CAD. Okay, so let's go on in here to the Swissy. Now the Swissy's almost made it right to our area. We mentioned here this par 46, and we're almost there, and that's at 38%. And that's what we have marked off. Same thing here because you're looking for complementary factors, and we know how the dollar index, cash dollar index, had broken out of its trend line, and so obviously this is a dollar pair also, but I mean that's the cash dollar index, but we're looking at this dollar pair, this major, the dollar Swiss. So same thing, we saw this yesterday, and we say, hey, look, it looks like it's just going to go and work higher. Same thing we're looking at earlier, we mentioned the Kiwi. So you're seeing a pronounced downtrend line basically here, 1, 2, 3, almost 4, and you see it going and break out. And so this suggests, I don't think it's going to be too tight, is that our actual target is going to be par 61. That's a very short-term target. We talked about yesterday whether it gets to the bias pivot of 120. We'll have to see, but for right now, we're just focused on what's happening in the shorter move. And so the initial target, before I think you can see the market offer a little bit of a pushback, you will also want to see if this coincides with a move in euro maybe to 0.609. And that would be this target here, par 61, on a very, very short-term basis. But for right now, the resistance, and we're just about there. We're only 7 pips away. We were looking for that. There's a move to this 38% before what we called a minor pause. So we're only 7 pips away from that. I think actually the high might have been 40, so we've come very close on this. We'll go and put the resistance at what we think our target is actually going to be. I expect the market to slow down a bit against his 38%, but it may tick up to 50 or 52 before it does that. But our short-term target, we'll list that as resistance, is going to be par 61. And let's take a look at support. Support now would probably be, and that's even pushing it a little ways, but it's going to be this 99.80. That's going to be support. Still a ways off, but I'm just saying, if we get more of a pullback, if we get to that 60 and then you see a real bit of a pushback, then, but I think that would even be a stretch to get to 99.80 at this point. Looking at what we have for on tap today, we have a Canadian employment picture and U.S. import-export prices. We do have preliminary University of Michigan. That's not going to be till 10 a.m. Eastern time. So once again, on the Swiss, we did get a very nice break here on this trend line. We're just a split away here from the 38%. So we said we'll probably see a little bit of back away from that, but I think we'll get to this par 61 on resistance, and 99.80 would be support. And that's what we have for now. We'll be back from break.